It's my favorite weekend of the year. It was the Berkshire Hathaway's annual meeting where we get to sit and listen to the great minds of Warren Buffett and Charlie Munger for 4 hours talking about what's going on in the economy, in the stock market, not only for Berkshire Hathaway, but obviously for the economy as a whole. And one of the key messages that I got out of it was Warren's warning for new traders. And he kind of talked about his experiences, has over 62 years investing in the market, and wanted to put forth that knowledge that he's learned over. So we'll be covering some of the things that he talks about and going over some of the examples. So stay tuned for that. But if this is your first time here, welcome. My name's Nick, and this is Ways to Wealth. Before we get into the video, I'd like to ask you a huge favor. If you get some value or you learn something new, hit that like button for me. I definitely appreciate that. And if you haven't already, consider hitting that subscribe button, turning that notification bell on. I would appreciate that as well. So going back to the original part, getting into the meat and potatoes of the video, Warren brings out this warning right off the bat for the new traders.
I would like particularly new entrants to the stock market to ponder just a bit before they try and do 30 or 40 trades a day.
Then Warren proceeds to bring up a list of the top 20 companies throughout the world that are listed by market cap, and he has a quiz.
Make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, you know, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. But what would you guess?
So I don't know if you guess, but if you guess something, leave it down in the comments. Which one of those companies that you think are going to last in the next 20 or 30 years? He then proceeds to bring up a list from 1989.
And look at the top 20 from 1989. And if you look at the top 20 from 1989, there's two things that should grab your interest, at least two. None made it to the list 30 years later, zero. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down zero. And I don't think it will be zero. But it is a reminder of what extraordinary things can happen, things that seem obvious to you.
So we can see from the example that Warren's trying to put out is that if we look 30 years ago, we look at this list, it's made up of a bunch of companies that are primarily based in Japan. Fast forward 30 years and not a single company on this list is top dog anymore. So when you take a look at the list of current date, the 2021 list, if you fast forward 30 years into the future, which one of those are likely to be on that list? And it's a very high probability that the answer is zero. Now, Warren did mention that he does think that there is a possibility that one could be on the list, but that's basically highlighting the fact that the future is unpredictable.
We were just as sure of ourselves as investors and Wall Street was in 1989 as we are today, but the world can change in very, very dramatic ways.
Now, with that being said, Warren takes it a step further and he brings up the perfect example, and he uses the auto sector. So he paints a picture and he tells you, imagine it's 1903, you're Henry Ford, you're looking at starting this automotive company. You can see into the future, you can see all these highways being built. You can see all the freeways, the population's growing. You decide to open up a car company. He then breaks down a specific example of a company by the name of Marmon, and they're most notably known for winning the first Indy 500. And not only that, they were the first company to create the rear view mirror. This is because back in the day, You used to have somebody sit in the passenger seat and they would look behind. That guy was sick, so they had this invention come in. So that's a little bit of a cool story, but let's listen about this example.
So I decided to look at the history, and I thought I'd put up the list of auto companies from over the years. And I was originally going to put up just the ones that were the M's so I could get them on one slide. But when I went to the M's, it went on and on and on. So I just decided to put up the ones that started with MA. And as you can see, there were almost 40 companies that went into the auto business, just starting with MA, including our Marmon there in the middle column, and which lasted for quite a while. But it was selling cars in the 1930s were really quite special. But in any event, there were at least 2,000 companies that entered the auto business because it clearly had this incredible future. And of course, you remember that in 2009, there were 3 left, 2 of which went bankrupt.
So the point that Warren is trying to point out here is that there's been so many companies in the auto sector that have tried and failed. And for the average investor, it's extremely difficult to pick the winners. Now, with that being said, there is a solution, and I'll let Warren tell it to you.
But you couldn't help but do well if you just had a diversified group of equities. U.S. equities would be my preference, but to hold over a 30-year period. But if you thought you knew a lot about which ones to pick, or the person that you had hiring, you were paying a lot of money to, had all these ideas, and they could tell you their best ideas in 1989 did not necessarily do that well, although overall equities were absolutely the place to be.
So I know we've talked about it before, but a low-cost ETF S&P 500 tracker should be a core position. I know it's very boring, but if you believe in Warren Buffett, in the long game, investing is supposed to be boring. So that's like a majority position of mine. That's where a majority of my funds are in. But yeah, like Warren says, it's supposed to be relatively easy to watch it grow. Picking stocks is hard. He puts a lot of time into it. I know the performance probably hasn't been the best over the past, 10 years for Berkshire, but this man has so much knowledge, it would be a shame not to listen to him.
There is a lot more to picking stocks than figuring out what's going to be a wonderful industry in the future. So I just want to tell you, it's not as easy as it sounds.
Well, I hope you enjoyed the episode. Again, if you made it this far, hit the like button. And if you haven't already, consider hitting that subscribe button, turning that notification bell on. I hope you all have a great week in the markets. Happy trading.